What's up, everyone? Matthew Winters here. Welcome back to my channel and thank you for joining. I hope everyone is having a wonderful trading day. Today we're going to take a look at two must-have stocks in your portfolio during a time of recession, and as a bonus, they're also solid investments during our current situation of a pandemic and large amount of us being on lockdown. If it's your first time here, make sure to hit that subscribe button, and if you enjoy the video, please smash that like button because it really does help out and it helps this little channel move up in rankings. So during a recession, we really need to take a look at sectors and markets that are required no matter what the economic climate is, right? People need food, we need water, we need electricity. These are just things humans need no matter what. So again, these are sectors we need to keep our eye on to diversify our investments to protect us during a downturn. So the first company we're looking at is Walmart. Now, I do want to say before we get into it as far as an entry point for this stock, that it is trading above its 52-week high and it's not that far off of its all-time high. So we can see all-time high, $132.33. Currently, as of right now, trading at $123.67. So it's really not that far off of its all-time high. Typically, I do not enter positions where companies are at or close to all-time highs. I like to wait for a 5 to 10% pullback before I start to look at an entry point. Now, I do own shares of Walmart, but my average cost is around $119, so please keep that in mind. Now, the reason I like Walmart is because first, they are considered an essential business, and during times of a pandemic or being in a lockdown, they are still producing revenue. Alongside that, they have a large foothold in the grocery segment, accounting for about 56% of their US revenue. Now, Walmart also benefits from being a one-stop shop. You can walk in to do your grocery shopping, you can pick up your prescription drugs at their pharmacy, and you can pick up a flat screen TV that honestly you don't need during a recession slash lockdown. But point is, they are essential and they will always be open no matter what the economic climate is and if we are in a lockdown or not. Now, if we pull up the larger graph here and expand out here, and we look back to the 2007-2009 to see how they did, we can see really the start of the recession is right around here, and then the end is right around here. So right in this part here was the last recession, 2007 to 2009. We can see that it did hold up very well. It did have a slight pullback from the end of 2008 to early 2009, but it did grab a foothold above the lows at the start of the recession. And if we take a look at the dividend growth, we can see that Walmart has uninterrupted dividend payouts for over 46 years straight and has 46 years of steady dividend growth, which means even during all the pullbacks and recessions over the past 46 years, they've continued to pay their dividend. Now, if we take a look at Walmart's current assets compared to their current liabilities, we can see a small red flag. Now, typically when I invest into a company, I like to see assets higher than liabilities. With Walmart, we can see that current assets are at $61.8 billion and current liabilities at $77.7 billion. However, Walmart does a $500 billion in revenue a year, so to me, this is a minor red flag, but one to be noted. The next company we're looking at is Duke Energy. Duke has been around since the early 1900s and is the largest electric utility company in the United States, serving 7.7 million people electric service and 1.6 million gas customers. People need to have electricity, and a lot of people need gas for cooking, hot water, and depending on climate and season, obviously heat. Now, if we take a look at their 1 year, we can see that Duke is trading about 20% off of their below their 52-week high. Now that to me leaves some room to find an entry point into this stock. Like Walmart, I do own shares of Duke with an average share cost of about $83 a share. Now if we pull up the larger graph here and we look back to about where the last recession was, we can see that there was a little bit of selling off from the start here roughly around here. So you can definitely see that there was some selling off, but it was very minor compared to how the overall market was doing at the time. Honestly, Duke only lost about $5 a share from the beginning of the recession to the end. So really, really minor in the grand scheme of things. And if we look at Duke's dividend, we can see that they have had dividend growth and uninterrupted dividend payouts for 12 years, showing us that even during the last recession, they still paid out. Now, Duke pays out about 74% of its earnings in dividends, which is a safe payout ratio and does leave Duke with enough cushion should business conditions unexpectedly worsen. Now, if we look at Duke's current assets compared to current liabilities, we can see that similar to Walmart, we see liabilities higher than assets. Duke's current assets are sitting at $9.1 billion and current liabilities at $14.7 billion. However, in the utility sector, this is common throughout due to carrying high debt levels as their infrastructure requirements make large periodic capital expenditures necessary. So those are the two must-have stocks during a recession/pandemic lockdown. Again, both stocks are in my own personal portfolio, and I do believe in them for investing for the long term. Hopefully you found this information helpful, and if you did, don't forget to hit that subscribe button, and as always, smash that like button because it really does help out. Anyway, trade safe, take care.